What is going on YouTube? It's Brendan from Market Makers. Big video today. My last two videos were also huge videos. Guys, if you didn't watch the last two videos, I went over harmonic decay, my most recent Bitcoin video showing you all the price targets for 2023. Watch that video, my most recent Bitcoin video prior to this one. And then the video right after that, I did the same exact thing for the equities, all the 2023 price targets. I'll throw up a playlist on the channel so you can reference them, but definitely give those a watch. Guys, we got to look at the pattern because we are on Dante's descent. We are on our pivot candle that's been playing out since the all-time high, netting these massive trades, 64%, 40%, 28%. Big swing trades based off this pattern. Will the pattern continue to play out? Patterns are nothing more than forecasts, so it's great to have a beautiful weekly pattern, but setting up the trade, you actually trade the charts. You guys know that watching this channel. So we got to see where Bitcoin's setting up or where it should get to set up a trade. This program today is going to be brought to you by our two sponsors, guys. You want to trade Bitcoin and all of the cryptos? Check out BITGET. You can buy spot. You can trade futures. Our link is in the video description. It helps support this channel. Do appreciate that if you plan on trading. And of course, check out SimpleFX to trade all the equities, including the individual stocks, the indices, forex, commodities. We're going over gold and silver today, by the way, at the end. Going to do a deep dive by popular request for gold and silver. And you can also trade Bitcoin there and a few different altcoins as well. You do get up to a $5,000 bonus on SimpleFX based on your deposit, and they will pay for your first month in Market Makers Discord. If you want to take advantage of that offer, deposit $1,000 there. Send us your screenshots, Telegram link in the video description, or just message them to us on Discord. Lee will take care of you. Let's go ahead and jump into this, guys. So we're on our pivot candle on the weekly time frame. And if we look at this, remember, we have the 20 bar tops, 140 days, and the daily translation, when you translate it, doesn't equal out because of the translation of pulling a 7-day, one candle that has 7 days versus breaking it out, right? So we have 138 bars, 140 bars. This was January 3rd. I went ahead and moved it out till tomorrow because that would give you the 144. We just hit our one spot 414 here as well on our fib time. And of course, looking for that first bottom win, guys, based on that spring equinox, that March 26th here on the fib time for the 1618, phi, the golden ratio, or April 2nd based on the pattern. So the pattern's giving us quadrants. That's the way to view the pattern. Patterns are not, they can be, as you guys have seen, when this plays out, it can be literally on the candle. But remember, within that candle is 7 days, and you have to set the trade up, which is why it's so important to trade the actual chart. Now, we know price is going to be compressing. We know price is going to be moving because looking at Bitcoin, this is our Market Makers Caterpillar, officially our Caterpillar, releasing it in the room today with the tutorial guide. When you do join our Discord, guys, that link is in the video description. You do get, I think we're up to 4 custom indicators now designed by Fractal Trade 15 for us. This is set to specific guidelines. It's basically a triple layered Bollinger Band with special standard deviations. And as you can see, you have a lot of compression. And you look at this compression, this is the most compression for Bitcoin going back all through the bull run. You have to go way back to the beginning. So to give you something to compare this to, recently we gave you this trade here, the 28% drop. Price moved 18%, then dropped 28%. This inner channel is the tightest channel for the Bollinger Band. And do you see how wide this is versus this? Okay, and this looks like it's just starting to peak open a little bit on the daily time frame. So in other words, you have more compression now than you did when you got a 19% pump and a 28% drop. So we're going to see some movement, guys. So regardless of if this goes to Sunday, the next weekly candle is Monday. Okay, so between now and Sunday, if we don't get that pump and dump or just straight dump, well, maybe it bleeds a couple days in the next week, but we know based on what's going on with the price action, there is a big trade coming in. So let's go ahead and look at this moving forward. If we pump up, here's the weekly time frame. Again, 5 touches, symmetrical harmonic decay. As Plato said, the cycle of growth and decay are one and the same. Very, very harmonic decay here in the descending channel, touching the roof, touching the base, touching the roof, touching the base. If we touch this roof, then we drop, okay? That's your drop. That's when you're descending from there. And that roof, looking at the weekly time frame, is right at 18,411, back testing the 1272, the square root of phi, okay? That's what you'd be back testing here. And of course, we're on that candle now, the pivot candle for the weekly time frame. So can we at least pump up to 18,411? Well, we're at 16.8. I think we've got as high. I think somebody in the Discord told me we almost hit 17K, or we did. I don't know. I was out walking the dogs on the ranch, but I think we almost hit 17K. And so we'll see if we can get up to this level at least on this candle. And if we do, guys, this is just a very, very symmetrical decline. And of course, this will give us a spot 5 harmonic ratio in a contracting market. The expansion ratio for that is 2 harmonic ratios. And this would drop you to the 12,747. And that would be around that spring equinox date, March 2nd, out to early April, okay, April 2nd, April 3rd. So that's what we're looking for, is this next move, looking for a pump up, wear short. We got guys scalping in and out of here all day long on the Discord. Some of you high frequency traders, I'm a swing trader myself, but you can see we got above the 50 here on the daily time frame. And again, here's our January 3rd pivot that we just passed on that daily translation. So we want to see if we pump up. Now, the real golden target for me, guys, is if this chameleon pattern completes. Okay, if this chameleon pattern completes here at the 1 fib, giving you a symmetrical move of this movement here at the 1 fib with your VWAP. This is your volume weighted average price, going all the way back to June. Okay, so almost a 6 or 7 month now volume weighted average price. This is where the price, actual price value could be found. There's algorithms that track VWAPs. And then you have the 200 descending just above that. That target, guys, this quadrant, and I realize this is higher, this is 19,153. But this would be like the holy grail trade if this comes up, because you're completing market symmetry here at the 100% retracement, the 100% move. You're completing market symmetry. You're tagging the 200. You haven't touched this 200 since the last spring equinox when Bitcoin was 48.2 and I shared that trade. You have not touched the 200 since then, okay? That gave you a 64% drop. So would love to see us tag this, because if we just start declining from like somewhere down here, I mean, it's going to be a long time before we hit that 200 on the daily. So this would be excellent if we can actually hit this. So 19,153, if we can get past the 18,411, 18,411 completes a huge pattern on a weekly time frame, much stronger than the daily time frame, okay? But on the daily time frame, you're ticking so many boxes if you can get up to 19,153. Completing my harmonic pattern here, the chameleon pattern, maybe getting a wick up, even if it's a scam wick, to hit that 200, and you're hitting the volume weighted average price, the VWAP price. Just lots of check marks here if you can get up here to 19,153. I'd be super excited we get up to 19,153. Going big or going home, guys. Looking at this on the 4-hour time frame, money flow MFI, one of our indicators as well, is coming up over the median line. This is a volume weighted RSI. You're below your 200, 233. You got a bullish cross here in your 5 and 21 volume weighted. So again, you know, we have that super tight compression, looking for Bitcoin to move. I do think that move will be up and then down, because we have history of this. Just before we did the 28% drop, rallied up 18%. See, people only remember the moves down or the parabolic move up. You got to look at the move before the move. The move before the move was 18% rally, 28% drop. If we get any type of rally, 10%, 15%, we only need, I think, 8 or 10% to get the 18,411. So that's totally doable. And if we get above that, look at that 19,153. Let's go to the S&P, guys. S&P last video went over our esoteric chart. We have it for Bitcoin as well. This is nothing, you know, this has nothing to do with astrology. Again, this is planetary cycles. This is, you know, for instance, the spring equinox, historically, after the first new moon, for hundreds of years is when the agrarian cycle began for spring. You started planting everything, okay? So this is planetary cycles tie in to other cycles, and you can see that in the marketplace. At least that's the theory, right? So we're on the 1-year anniversary of the all-time high for the S&P. January 4th last year made its all-time high. We just passed that. Today is what, January 5th? But yesterday was also the Earth perigee, when the Earth is closest to the sun. The sun was the biggest. I don't know if you guys happen to see that, but the sun was the biggest in the sky it's going to be for the whole year, and the Earth was at its max rotational speed. Now, what happened after we made the last Earth perigee? Sell off, okay? And we're on that weekly candle now. So again, lots of changes could be coming in the marketplace, perhaps beginning next week, if patterns repeat themselves. And oftentimes they do, which is why this gives you key pivot points in the market to track and look for. And if we look at the S&P here on the daily time frame, lots of different things setting up here as well. You have similar patterns on some of these equity charts, but let's just do this real quick. Let's take our retracement level, because you're just clustering up down here. You got up to 38.91. Remember last video I told you you may only get up to 3900, right? There's your 50. You got up there since last video. You got up to your 3900, and then you've just been struggling since then, okay? Would you come back up here to retest this? I don't know. Now, overall, you're giving yourself a bullish Gartley structure here, which is also how my chameleon pattern's based, because you have your low, you have your higher low, okay? And you have your XA leg coming down here. So you do have this nice structure here, but it doesn't mean that it will play out. I don't even know if I want to use that wick again, because it's that hyper volatility scam wick from the Fed meeting. But you do have this type of structure that could call for price to come up again. Okay, now I don't think it necessarily has to play out like that. And obviously you've had the 200 be very strong resistance, but the overall structure here is bullish for a move up. And if you want to measure this and look at the 100% move for market symmetry, again, I'm going to avoid that wick, but let's go ahead and do this. 618's at 4140. I mean, your one fib would be at 4374. Do I think the market's doing that? No. Amazon just announced massive layoffs, as well as what do we have? Oh, the jobs report came out for December. 235,000 more jobs are added. That was well above estimates. I think it was private payroll. Might have been the ADP report. I don't know. I saw it flash on my phone right before I started recording, but well above estimates. So what does that translate to for the Fed? Tighter for longer. Raise rates more, hold it up there longer. Again, none of the things are bullish for the market. If you guys watch my equities video for 2023, you'll get the full insight of how I feel what's going to happen in the market. But this individual pattern could turn bullish, okay? Could turn bullish here if it starts breaking back out. But realistically, it can also just fall apart as it did because it failed here, okay? So you failed at your 200, failed at your 233. On the weekly time frame, I just showed this. Where did it go? I don't have that chart, but you guys have seen the trend line across the top for the S&P, and it's been holding true this whole way. So, you know, this is what we're going to see here. Let me zoom in here on the S&P. Let's go ahead and mini cough this structure here and do it like this. And let's do a horizontal ray. Selling climax, get our reaction candle right there at the 50, and you can just see you're just range trading. Okay, so you want to see a breakout above the range. It'd be beautiful for a textbook pivot out to the upside, or start breaking down and get your inverse cup and pivot down to the downside. But you're just stacking candles side by side, basically like Bitcoin, letting the volatility compress and then working yourself into a move. But overall, again, just you do have that basic structure here for a potential harmonic pattern such as a Gartley or a chameleon pattern. But I do think that you know, you're going to have just extremely tough resistance right here in this quadrant. I'd be very surprised if you got anywhere through this. And of course, if we're looking at retracements, doing it like this, you can see we fell to the 486 at 3803, and you're pretty much holding that. If you start coming down from there, then you got to watch your 618 at 3722, and then you're really just starting to blow the structure out some, and you're declining, okay, and you're just falling apart. So we'll see if we get our pivot. You know, we don't have a pattern, we don't have any type of special pattern on the S&P or the NASDAQ. We have it on the Russell and Bitcoin, but those are both calling for pivots. I can't imagine that they would pivot potentially this week or next week, and then the other markets go up. Obviously, the NASDAQ's weaker, probably the weakest of the bunch right now. But I don't think, I think they basically will move in unison, give or take a day, right? So that's what we're looking at on the S&P. On the Russell, all-time high up here, guys. Pandemic low over here to your left. 20 bar tops, just like Bitcoin. Isn't that funny how that works out? The only channel tracking Russell and Bitcoin together. Within 48 hours of each other, both made their all-time high. Pattern of descension. This is Dante's Descent, exact same as Bitcoin. 20 bars between the largest waves, the largest up waves, and we're on our pivot bar now. And again, this doesn't trade on the weekends, obviously, except for Sunday night futures on SimpleFX. But so this, whatever this is going to do, it's going to do it by tomorrow. And if the pattern continues to play out based on this large time frame, well, look what happened at every single pivot. Okay, every single 20 bar top, then cause a decline. Then cause decline. So if this plays out the same way, you should be declining starting next week, right? So we'll see if this does continue to play out. But like I said, we have to have a trade set up. Now, what has the Russell been doing when it did pump back up? It back tested its 200 or 233 here on the weekly, and it got rejected, obviously. And it's just stacking candles side by side. So again, you can just do the same thing here. You can do fib retracement. You can see you're hitting your 618 at 1740, and you're stuck between your 46 at 1776, very special number in my country, and then the 618 at 1740, and this is where you're just vacillating back and forth in here, looking for a break either direction, okay, under strong resistance here. And if you look at the Russell on the daily, again, daily translation does not equal the weekly translation because of 7 days to one candle, but 100 bars, then your pivot, 99 bars in your pivot, and we are out here now. I've moved this out to Friday because obviously we still have another trading day tomorrow, and so we'll see if tomorrow's bar based on the weekly candle is the last candle before we get our next decline. Okay, that would give us 101. So you have 99, 100, 101, and you notice here 143, 140, 141. Remember, forecasting, guys, looking for the actual trade to set up. So on the Russell, I have triple layered Wyckoff here. Let me go over some of the big things, and then we'll look at the smaller things here. Let's get rid of the Fibonacci fan. Get rid of some of these drawings. So we have a larger Wyckoff structure here, as you can see. Within the larger Wyckoff structure, I'm doing what I call mini-Koff structures for these zones, okay? And then you can see here in this smaller zone, this is your 200, the white line. This is your 50-day right here. And you're just ranging here in this smaller Wyckoff structure. You broke down in this Wyckoff structure. Here's your inverse cup. You see your inverse cup? You got your pattern failure here with the Fed meeting, and then you dumped, right? And now you're in a new miniature accumulation zone within a larger Wyckoff structure, and you're just ranging. You had an up thrust, came back down, but again, the overall structure for a potential harmonic pattern is there. The market would have to flip bullish, which I don't think it will. Maybe we'll get a push up, some type of push up, but we're just looking at fib retracements for that, okay? Fib retracements, quite simply, be something like this. And you can see your 200s right around your 618 at 1835. I would venture to say if you did push up, again, if the pattern plays out, guys, the Russell should be selling off next week. Doesn't have to play out, but if it does play out, you're going to see this start to break down. And if it doesn't play out and it goes an extra week or whatever, maybe we have some new type of pattern developing. But that 20 bar pattern's been in place since November of 2021. So I keep forgetting we're in 2023 now. Isn't it crazy how time goes by so fast? But November 2021, that pattern's been in place. So if it does start selling off, you're going to see this break down. And if it doesn't, and we start moving up, then again, we're going to trade the charts. But if we did move up, I'd be looking at the 50, the 200 right here in this quadrant. And I do think here on the NASDAQ on the weekly, and you can see what you're back testing here. This is your 233, and you hit it, and then you dropped again, okay? Again, NASDAQ, super, super weak here on your fib retracement. Let's see where you're at. You just fell below the 786. Your one fib's at 10,427, where we pulled this from. So let's see what this looks like here on the daily chart. It's funny, people think angles and geometric shapes don't work in the marketplace. This is your 45 angle from the pandemic low. Look at price. This is what Gann utilized, Wyckoff utilized to determine bullish and bearish trends. You're in a bearish trend, macro trend now. Obviously, you've been in a bearish macro trend, but we had that parabolic rise up. But this is where you're at, and you're hitting your head, even placing the wick on the 45, okay? Getting the wick on the 45 and getting rejected from the 45, and you're clustering here. So in a Wyckoff sense, you're getting down thrust outside the range. You need to have a sign of strength after this. You have to get back on top of this 45, and I mean, you got the 50 way up here. The 50 is at 11,377, and you're at 10,788. Again, NASDAQ looks weak. It looks like it's going to roll. It's ready to roll when the other markets do decide to turn down, specifically the S&P, the broader market. All right, guys, let's get into metals. Oh, actually, let me just give you a fib target because somebody's going to ask me for it. But we'll go up to this top, avoiding that Fed wick. So again, we just did this. 10,600 is where you'd be looking at if you do start to fall down, okay? And let's go ahead and get rid of that. And let's go to the metals. So what I'm showing you on the chart is the great financial crisis. Now, YouTube is littered literally with channels and podcasts dedicated to gold and silver. Now, I told you before, my metal bug friends hate it when I talk about the metals, okay? I own metals, full disclosure. My family does too. Long term, being that I'm forecasting for myself, my view of the economic space, stagflation for the rest of the decade at a minimum, meaning higher than 2% inflation, low to no growth, okay? Basically a repeat of the 1970s, although I think a lot worse because we have $31 trillion in debt, which we did not have in the 1970s. So we had, I think, $1 trillion in debt in like 1980. So that's where we're at now, guys. But in the great financial crisis, metals dropped, okay? Metals dropped. Gold itself went down 34%, Fibonacci number. Silver went down 60% in the great financial crisis. And people ask me why. And they say, this time is different. And I will tell you, no other sentence has been said in the marketplace that has cost people more money than this time is different. Okay, so do metals have to drop more than they already have from their high? No, they don't have to do anything. This is all TA. This is based on market history, based on how I trade. But you have to look at the psychological reasons and the actual human nature reasons why metals will sell if equities start dumping trillions of dollars. Most metals are paper traded, okay? So you might know somebody who owns gold, owns silver, family members, you might own some. The big banks, the financial institutions that are trading this, they're trading it in paper, okay? They're also trading in futures. You know, gold that's held in reserves places, they sell paper on the gold. So you have some of the same gold plots sold multiple times. But when you have financial crises, just like in 2008, it gets liquidated because they need the cash. They have to free up the cash. And you might even see that with some of your friends and family who don't understand what's coming in 2023. They don't understand what's going to happen in the market. If they need to free up some money, maybe like, you know what? I got $5,000 in gold sitting back there. Let me just get rid of some of my gold. I got to pay these bills. And you're going to see that, okay? And then this is the crash cycle for the S&P in 2008. It started here October 8th, 2007. Right after the fall equinox, guys. And then you had your 57% decline in the S&P. 57% bottoming in the spring equinox, March of 2009. Now, here's your gold and silver high. They're within like a few days or a week of each other, okay? Gold and silver high, gold and silver low. Gold dropped 34%, silver dropped 60%. And then they both rallied back up. But you can see it's like a mini cycle inside the larger dumping cycle of equities. And I think you're going to repeat this same cycle again. And I'm going to show you this on the charts. We're going to use a 3-day charts because gold has basically been in a massive long-term, what is this? This is back to 2020, okay? So we're going to put this in Wyckoff so you can see this structure here and the movement that we have here in gold. So you're looking at a complete, like almost 2.5 year chart here, okay, on gold. And we're going to do the same thing for silver. Buying climax candle, then you come down, you test your base. Keep in mind, this is, multi-year chart here, okay? Because if you go into smaller time frames, we can put these in tighter Wyckoff ranges, but for this chart, we got to use a bigger range here. And you can see your down thrust, double bottom, come up, volatility in the range, retesting the base, up thrust up here. I'd actually put this on the buying climax candle here. And then you can see you have your up thrust here, double top form, breaking down, double bottom form, and now you're rallying up. But where are you rallying to? Is this the top, right? These are the questions that you need to ask. Because if equities do turn down and look to bottom in March, do you think gold's still going to go up? Now, it's hard for people to wrap their mind around this, but gold and silver are moving with the markets. Even though they're traditional inflation hedge, the Fed has been aggressive, at least perception-wise, fighting inflation. And a lot of that money that was going into gold and silver also went into crypto, guys. But this, to me, looks like it's topping out, okay? And I think it's going to decline more. So let's take our impulse down to this wave here. You're hitting the 618 at 1851. You see that, and you got rejected. You wicked above it, got rejected, and you can see that if you start topping out here, you most likely are going to make some type of shape, maybe a double top or something on a daily time frame. This is a 3-day chart, but even on a 3-day chart, you can get massive double tops, okay? So most likely you're going to make some type of double top structure or something and then start rolling down, especially if the equities pull down, because people will sell gold when they need money. And this, again, looking from a Wyckoff perspective, an up thrust led to down thrust. If this makes a lower high, I think your bias is going to be come back down into this range where you could potentially roll out of this range. But let's get a couple projections for downside. Let's just assume, because we're hitting the 618, right? Let's assume that we're hitting the top here. And we can always get Fibonacci confluence, as you guys know I like to do. We'll go ahead and take a trend-based fib from that low. We'll use the extreme, the high, all the way down to the other extreme. Look at that 618. Do you see the confluence here? Using two different Fibonacci methods, two different wave projections. I'm getting the same number here, but there you go. 618, 618, stacked on top of each other. Lots of resistance, right? You got a Fibonacci resistance zone right here at the 618. You have it above it at the 707, the 786. They're all double layered. This is heavy, heavy resistance. I think gold's going to turn down here. And if it does manage to come up, if the equities rally a little bit this week or next week, maybe it comes up, pokes its head above this. But I think this quadrant here is pretty much your top, okay? Not top forever, guys. Top for we're talking about setting up trades, right? Top forever. I mean, I think gold down the road, after everything comes down, just like you saw in that mini cycle, I think you're going to see gold recover faster, just like it did previously. But for now, I think you're coming back down. So let's get some projections to the downside and see exactly where this is going. So if we want to use trend-based fib, let's do a law of three pattern here. And we're going to take this impulse down to our base, up to our current top, and see where we're going. Well, market symmetry has us going to 1481, okay? So 1481 is market symmetry. Let's see if we have any patterns that come out this way as well. Let me take one of my triangles. Let me see what ratios we get here for these fib retracements. B, give us our C. Because it's 653, basically 618. So the expansion ratio, the reciprocal ratio, and in a crash will give us 1618. Okay, so let's go to 1618. And when will this bottom? Well, we know it does a mini cycle, but let's go ahead and just look at March 27th, April 2nd time frame. That spring equinox is always a good guess. And 1460. So you have 1481 for a symmetrical move, and 1618 roughly gets you 1460. Let's call it 1450 because this is 1616. So 1450 is what you're looking at there for a price target, okay? Now, if we want to look at this for some other retracement, some basic retracement that, you know, even people on TV know this type of retracement. If we go to our pandemic low, because gold and silver crashed like everything else, let's go to our pandemic low, come up to that first impulse here. And look what you get on the one fib, 1451. 1451. Now, you guys know from watching this channel, what has my premise been all along? $6 trillion in stimulus allowed the equity markets to 6x their normal 2-year returns. 6x, creating a super bubble, the third super bubble in the last 20 years. I've been saying since November 2021, you're going to give up the pump. And this essentially is a 100% retracement. Dow theory, GAN, a 100% retracement of the move. But more importantly, knowing gold went down 34% in the GFC, let's just take its high here it went down 34% from the high that it had made. So is this higher? No, this is the high. Okay, yeah. Let's see what this 1 fib 1450 would be. Okay, you see your Fibonacci confluence. This is a 30% move. So this is still less. It's still going down less than it did in the GFC, and yet it's totally reasonable, totally feasible, giving up that whole pump. So I know this will upset Peter Schiff because I'm sure he watches my videos. But you're going to, I think gold is going to 1481, 1451. The question is the time. The question really is just the time, because they have that mini crash cycle within the overall crashing markets. So let's go back to 2008 really quickly. And, you know, again, people always ask me to live stream. This is why I don't live stream, because I basically do all my charting live for you guys. So you kind of see my thought process as we're looking at it. But you're looking back here at 2008, right? So here's your high. When was that high? The high was in the spring equinox. Imagine that. So March 2008, here's your high. You see that? If we take the same drawdown here, just so you guys can see the numbers, so you know I'm not lying to you, 34% Fibonacci number. And when was your bottom? October 24th, again, just after the fall equinox. So you made a high in spring, made a bottom in October. Maybe it's reversed this time. Maybe spring equinox, maybe those same date range, March 26th to early April, you make that gold bottom. Maybe gold draws down the rest of that remainder to get down to that 30% level. And then you go up, right? Because you have that mini dump cycle. So we'll see how it plays out. But I do think gold's topping out where it's at now, and it is coming back down to a new range, down lower. And let's look at silver. Silver from its recent high is down 41%. Let's go ahead and do silver. Silver went down 60%, okay, in the GFC. Let's put this in Wyckoff, get some market structure on this. Let's do Wyckoff buying climax, and then our base. And again, this is the same time frame, guys, going back to August 2020. Okay, so multi-year up thrust. You can see how similar the charts are. Kind of how like Bitcoin controls a lot of the alts as far as how the charts look. You got down thrust here, double bottom, move up, double top, exited the trading range, and now you're hitting some type of key resistance, right? This is a 3-day chart once again. Let me show you something, because a lot of people always love to see clean Wyckoff examples. You can do Wyckoff in any time frame, any asset, but it oftentimes, just like anything else, there's times and examples when it is super clean, and there's times and examples when it is not. And what I'm looking at here, guys, let me show you a super clean Wyckoff. This is how money flows through the market. And you're looking at a 3-day chart, so you guys can see this as an example, okay? So we have our selling climax, got a nice demand wick. You want to see at least a third of the wick on the candle, showing that you had the momentum to go up. Let's go ahead and put our ceiling on here, a reaction candle. Look, you have down thrust, you have volatility in the range, up thrust, sign of weakness, and then you get down thrust and a spring out. But more importantly, people always ask for examples of the Livermore pivot. Look how beautifully that Livermore pivot played out. This is exactly what you want to see. You break out, you spring out a Wyckoff, or you make your inverse cup here, your pivot, and what do? You back test. This is where Jesse Livermore loved to trade in a trend reversal on the back test. That's why Wyckoff affectionately named it the Livermore pivot. Then you pull up, and now it's rolling over. It's rolling over here because it's either going to make a backup, which it will pivot out from once again, moving up, or it's going to do this, okay? So understanding how money flows through the market, which is what Wyckoff specialized in. Richard Wyckoff, close friends with Charles Dow. They had lunch together once a week. Friends with W.D. Gann. Wyckoff owned the largest financial newspaper in the world at the time, and he understood how manipulated the markets were. And that was what his whole method was trade with the money. And this is a textbook example of a Wyckoff breakout here, okay? So you can find these when you look for them and understand how money flows through the market, and you can make money trading. But let's go back to this larger example. I got sidetracked, and we have another, this video is going over 30 minutes again, but I guess some of you are okay with that. So let's go back to this example. Misclicked. All right, so where are we going here? Let's do the same thing. Let's take a fib retracement, from, what do we want to do, upside or downside first? Well, let's do the downside, or I mean the resistance. So you can see we're hitting our 786, okay? So we hit our 786 rolling over here based off this impulsive wave down. Now, let's go ahead and do a fib retracement from the pandemic low again. This is because this is going to line up just like gold, I bet. Let's take it from here, come up to this impulsive high, okay? Lots of people do extreme to extreme. Lots of people ask me what books to read on Fibonacci, and most of you are going to miss this comment because it's 34 minutes in. Robert Fisher was my Fibonacci mentor. He's written 4 books in the 90s, early 2000s, and like 2012, I think, was his last book. That's where I learned all my Fibonacci from, and those are basically like college level courses, guys. Not easy reads, but if you want to put forth the effort, you will understand Fibonacci sequencing. You will understand different concepts that you see on this channel. Some of his books are rare books because they're out of print, but that Wiley publisher, they still have some of his books in current print as well. And then Constance Brown, to a lesser degree, she wrote a really good book, Fibonacci Analysis, as well. You can check that book out. But this is where, look at this, you bounced off the 618 and then you went back up, okay? Now let's get a trend-based fib impulsive move down and we'll wrap this video up. Trend-based fib, impulse move down, law of 3 pattern. If this is our top, where are we going? And if you look at the trend-based fib, your law of 3 pattern will have you at 15 spot 88650. Right? So let's go ahead and take this off. Your 1 fib has you down here at 11 from the pandemic low. Let's go ahead and take that off and see how this would play out. Let's grab our triangles. So this may just be a stop, but you know, let's see. Silver's already declined 40%. Come up here, 807. This would be basically your 786. The reciprocal would be 1272 on an expansion move. And let's just use that same date, early April, late March. 12, I mean, look how this lines up. See, always looking for market symmetry. 1 spot 246. You're looking for the 1272, okay? And this would be 786 under ideal circumstances. So this is your reciprocal ratios. $15, 886. And where would this come down to overall if we went to that level? If we went there from the high, 47% move, roughly 47.5%. So almost a 50% retracement, right? Almost a 50% retracement. Again, one of the key retracements in any marketplace, almost 50%. 2008, you went down 60%. So could it go down deeper? Yeah, it could. But guys, this is what I'm talking about. You're trending that way now, and you can see it in silver, okay? So when you're looking at these videos on from Kitco and these other places, and they're talking about $50 silver in 2023, people coming out saying gold will be the best performing asset in 2023, all of this is going down before it goes up. That's my view. You have your high, you have your lower high, lower high, lower high. And if this breaks down, you just made a series of lower highs. But most of the people on these channels that you watch, even people I like, okay, I'm not throwing shade at any particular person, they don't understand how to read technicals on charts at all. And depending how you want to draw this trend line, you have a clear trend line showing you all your tops since this lower high, okay? So this is coming down in my opinion. As a matter of fact, I would like to set a trade for this. This is a 3-day chart. I got to see this on the daily, but you may be coming back up for a double top like this. And this could provide a really nice trade to the downside. You want to trade these commodities and check out SimpleFX. Guys, check out our Discord and do like and subscribe to the channel. Very long video for you today. Very excited. And Sunday kickoff show, guys. We'll be back on Sunday. Watch Bitcoin for that movement. And of course, watch and see what happens if the Russell does anything tomorrow. Take care, everybody. Talk to you soon.